Hey guys, Daniel here and welcome back to another video. Today I'm going to be going through Shift stock and talk about the massive run that it's been on over the past couple of days, why it's gone on this run, what I expect it to do over the next couple of weeks, and what I'm doing with the stock. So the reason behind this massive run is the anticipation for earnings, which come out this Thursday, February the 11th. So essentially, investors are expecting good earnings or great earnings. And in this video, I want to talk about analyst expectations alongside with that. So analysts are expecting Shift to do around $73 million in revenue for Q4 of 2020. Now, because Shift is a newly public company, we can't really get revenue figures from 2018 or 2019. So what we're going to look at is their previous quarter revenue. So if we take a look here, we'll see that their revenue for 2020, or I guess total revenues right here, was around $59 to $60 million in total revenue. Now, analysts are expecting around $73 million in revenue for Q4 of 2020, which is obviously significantly higher, about 20% growth quarter over quarter. So analysts are looking at that. I'm not going to be looking at revenue as much as I am about profitability. That's the main reason that Shift stock took a giant plunge a few months ago, back in November, when they reported their earnings. It took a plunge because they spent a lot of money on research, or rather on marketing and advertisements. We'll see where that number shakes out, but if it's significantly higher or the same as what it was last time, we could see profitability take a hit and probably the stock price with it. Now, I hope they manage to kind of cut down on those marketing expenses. They are something that's necessary, but we'll see where that number shakes out. That's a big metric to watch. How much they spent on marketing and advertisements, because that will be key in profitability going forwards over the next couple quarters here. Now, the next metric I'm looking at is, well, rather the main metric I'm looking at is gross profit per car sold. Last earnings report, they reported around $700 to $800 in gross profit per car sold. Now, obviously, this isn't that high and is one of the reasons why they are such a money-losing company right now. But there's hope. Carvana is the biggest player in the space, in the e-commerce used car space. Their market cap is around $40 billion, and this is a company doing billions of dollars in revenue on an annualized basis. Since going public in 2017, online used car retailer Carvana has boosted gross profit per unit to $4,000 from $1,000. This is huge, as it gives us a little bit of insight as to the potential of Shift's gross profit over the next coming years. Right now it's sitting at around $700, but hopefully over time that increases to over $1,000 to $2,000. Maybe $3,000 if they execute on a high level. But that's going to be one of the key metrics to watch this quarter. What is their gross profit per vehicle? Is it 800? Is it 900? Is it possibly 1,000? If it's over 1,000, that's huge, because that's increasing gross profit. And that's going to be one of the key things for Shift's profitability going forwards. I made an analysis video on Shift about over the weekend. And in that video, I explained that the valuation of Shift 3-5 years down the road will be highly dependent on their profitability. The more profitable they are, the bigger the premium that they trade at will be. So given that, the amount of gross profit per vehicle right now is around $800, their valuation would be significantly lower than it would be if their gross profit is perhaps $2,000 per vehicle. Now, with Shift, I've got a position built in this company at around $8 per share. I've been building it over the past couple of months here. I started the beginning of January. It's been kind of flat since then. And we'll see what happens going into earnings. I mean, I don't think it's great to go all in on a company right before they release earnings, where there is a significant probability that they release, a bit more spending and the stock takes a plunge because their profitability wasn't where it should have been. So honestly, dollar cost averaging is the best bet with Shift. That's what I did over time. I just put some money into it every couple weeks or something like that. So that's kind of what I'm thinking with Shift. If their revenue They beat on revenue, their gross profit per car goes up. Hopefully their spending on marketing stays the same or maybe decreases a little. I think that's good for the stock, and it's trading at a dirt cheap valuation right now. So even after this run, I think this is a significantly undervalued company long term. If you want to see my price target on it, make sure to see that video. I think it's around $44 per share. That's where I think Shift will be trading at around 4 or 5 years down the road. And that's base expectations, factoring in inflation, or factoring in rather dilution and very low revenue growth. And we'll see. This is gonna be a key metric, and to see the balance sheet as well, how that's looking. The balance sheet that we looked at in the last analysis video was a little outdated, as it didn't include the money received from the merger. So this is going to give us a lot of clarification, and listening to management team, their tone as to what's expected for 2021. That's also going to be a key metric to watch, and just kind of get a sense of what they think about Shift going forwards. Analysts think Shift's going to grow revenue by 103% for the year of 2021. We'll see what they say this conference call. I'm really excited for these earnings. I'll probably make a video right after they release them on Thursday, so stay tuned for that. Thank you all so much for watching, and have a great day.